Hi there, my name is Laksh Behel and I want to welcome you to Westernston. In today's video, we're going to show you how easy it is to use our 6-dimensional approach to growing your business, and we're going to take a real example to show you how that is done. And for that, I have created a little sheet out here on Google Sheets so that you know exactly what I'm doing, okay? So year zero is basically, we are going to take an example of a hypothetical company, which might as well be your company, because it's going to have very similar numbers compared to what kind of numbers you have in your business. Okay, so let's get started. So this is a business with a fixed cost of, let's say, $50,000 a year. That's your rent, your bills, your salaries, your mortgage, so on and so forth. Right? $50,000 a year is your fixed cost. It's a very small business we're going to talk about, but these numbers are equally applicable no matter how big or small your business might be. Okay, if your business is doing $500 million in revenue each year, maybe your fixed costs are $50 million, and that's okay. The factors are just like that. And we're going to start with year zero, which basically means the current situation in that business. Okay, so let's say this business spends $20,000 a year in advertising, okay, and gets, I don't know, 1,000 leads. Okay, so basically the cost of acquiring each lead is simply dividing 20,000 by 1,000, which is $20 each, right? You pay $20 or they pay $20 in advertising, and they get 1,000 leads. And conversion ratio is how many of these leads do they end up converting? So let's just say they end up converting 20% of these leads into clients. So they have 1,000 leads, and 20% of that is 200, right? They have 200 clients. So the cost of acquiring a client is the advertising cost divided by the number of clients they have. Okay. What's the transactional value? Transactional value is the amount of money that a client spends with you on an average sale. Or in other words, it's the average sale price, the average transaction amount that you see across your business. Okay, so let's say that's $500. Okay, this is a high-end store and the average transaction value is $500, and the gross margin is pretty nice. It's 50% gross margin. Of course, you have other costs like fixed costs and advertising costs. We're not taking that into account. These are, the 50% gross margin is after the variable expenses, the expense you have to incur in order to fulfill an order, right? The transaction frequency is basically the number of times an average client buys something from you over the course of 1 year. Okay, so let's say your average client comes back to you 2 times a year, and the relationship length is, let's just say, 1. So they come back twice in the first year and then they never come back. Okay, so now when you see these little arrows, these are the 6 factors that you can work on, the little hinges that swing the big doors, and when you work on all 6 of them, magic happens. Okay, magic happens. So let's just quickly calculate or estimate the profit of this company in year zero. So all you got to do is simply multiply all 6 of these numbers, okay, the ones with arrows, and then subtract the costs. Okay, that's how you estimate the annual profits of a company. And you subtract this, which is your fixed costs and your advertising costs. So this business is making $30,000 a year, which is, it is what it is, right? A small business making $30,000 a year, even though the revenue is pretty high. So the revenue, if you wanted to calculate the revenue, revenue would be, how many clients do you have? That's the number of leads multiplied by the conversion ratio. This is the number of clients you have multiplied by the transaction value, multiplied by transaction frequency, multiplied by relationship length. So of $200,000, there's a 15% net profit. Okay, and the EBITDA, the earnings before interest, taxes, depreciation, and amortization is $30,000. Just a hypothetical example. Okay, now with Strategist Star's 6-dimensional approach, what you try to do is you try to get a 5%, just a 5% growth in each of these factors throughout the year. Okay, you don't change your advertising costs, so it's basically $20,000. You don't change your fixed costs, it's still the same $50,000, but your number of leads is now, and this is how you add 5% if I remember correctly, the $2, yeah. So 1,050. You used to get 1,000 leads, but you tested your advertising a little bit. You changed your approach a little bit, and now you're getting 1,050 leads instead of the 1,000 leads you used to get. So of course, your cost of getting a lead has plummeted by 5%, right? Almost 5%. The conversion ratio again, from 20%, it goes to 21%, if I'm not mistaken. Yeah, 21%. So the number of clients is now 220, okay, 220. And the cost of acquiring a client is again, so you're spending $20,000 to acquire 220 clients. So now instead of spending $100 on each client, you're spending $90, almost $91 on acquiring a client. Again, transaction value. What you do is you increase that by just 5%, and believe me, 5% increase in transaction value, 5% increase in number of leads, 5% increase in conversion ratio, it's nothing. It's absolutely nothing. Same thing with gross margin. So you decrease your variable costs a little bit compared to the total volume, and then the transaction frequency, and again the relationship length. So you retain 5% of the customers from your previous years to continue, or you just retain 5% of your old customers. That's what this means, really. Okay, so now if you estimate the profit, you've more than doubled your estimated profits. Isn't that amazing? Even though the revenue hasn't increased that much. I mean, if you calculate the revenue, it has gone up from $200,000 to $255,000, but most of that incremental revenue is profit in your pockets. Here's why. Your advertising costs are just the same, and your other fixed costs are also just the same, okay? So you double your profit by increasing these 6 factors by just 5%, just 5%. Okay, but let's continue on and let's see what happens when you increase these things by 5% even more. Okay, so another 5%. So this is 20,000. I'm sorry, this is again $20,000. You're not increasing your advertising budget, you're not increasing your fixed costs. You are increasing, however, the number of leads you're getting, which is now going to be, so it's going to be 1,100 leads instead of 1,050 you used to get. And obviously the cost of getting a lead has gone up too, okay? Gone down too, I'm sorry. Again, the conversion ratio is increasing just marginally by 5%. And so the number of clients has increased to 243 this time. So you're getting 243 clients instead of the 200 you used to get 2 years ago, just less than 2 years ago, by a minimal 5% increment across the board, okay? That's not so hard, that's not so hard. And again, transaction value, you've increased a little bit by 5%, you've increased your gross margin by 5%, increased the transaction frequency by 5%, so your average client comes back to you 2.2 times in a year instead of just 2 times. It's not hard. If you're doing it right, it's not hard. Now, if you calculate the revenue increase is again going to be, okay, significant, but not that impressive, right? What is going to be extremely impressive is the estimated profit. Again, almost doubled, okay? With just 5% increment across the board, it has almost doubled. It's not a coincidence that Albert Einstein said that the strongest force in the universe is the force of compounding. You're using the same mathematical force here. See, all these 6 functions, all these 6 factors work in conjunction with one another, and they get multiplied. These are multipliers, okay? So just increasing everything by 5% doesn't give you a 30% boost. It gives you an 80, 90, 100, 150% boost, depending upon who you are and how things are going for you. Again, if we just do the same calculation again, I'm just going to drag this entire thing out here. Okay, And this time, the revenue increase is going to be, again, impressive. But what's more impressive is the estimated profit increase. So you have gone from $30,000 a year to almost 6 times that amount in just 3 years. That's 3 years of growing everything by 5%. And that's what Strategist Chart is all about. Every day you get one simple task, and that's all you get. Every week you get 5 tasks, 5 to 6 tasks, and these tasks contribute to a milestone. Every month we work on one of these factors, okay? Just one of these 6 factors every month. And our objective is for you to go from where you are to double, triple, quadruple your business, the size of your business, the estimated profit from your business in just a matter of a couple of years, okay? And this is not going to take a lot of time because you get all the tools, the training, and the templates. So you don't really have to do a lot. All you got to do is use our templates and then just go ahead and customize them for your business and deploy them. And if you need help with that, we are always there for you, okay? So go check out all the details about the Strategist Chart program. This is a program for small business owners and medium business owners. You can have a business of varying sizes and all the requirements are presented on the page. But this is how you get to the page. You go to westernston.com, you go to products, and you go to Strategist Chart, and you can check out all the details over there. I'll also leave a description in the link in the description if you're watching this video on YouTube. If you're watching it elsewhere, I'll leave a link down below anyhow. Okay, and you can see all the pricing plans, and you can see our guarantees. We have guarantees, so there's a 30-day trial. If you don't like it for any reason within the first 30 days, you let us know and we'll give you a full refund, no questions asked whatsoever. Okay, and we also have a 1-year monthly milestone guarantee. So every month you're going to be presented with 4 milestones, but if you can achieve just 1 milestone each month, just 1 milestone, okay, you don't have to have all 4 of those milestones throughout the year. If you can meet just 12 milestones and you don't see your business's cash flow growing by even 25%, you let me know and we'll give you up to $5,000 from our own pocket for wasting your time, okay? So we are that confident that Westernston works for pretty much all businesses. Now, if you're not sure, we have this little section here that talks about who this program is for, okay? It may not be for everyone. So you gotta have a certain amount of business going through or flowing through your company in order for this to really work well for you. But if you have a certain amount of business flowing through, even if it's just a little trickle, this will work well. Of course, it won't work well if you have a really large business either. I mean, a really large business is something that's doing $100 million a year in revenue. Now that may or may not benefit that much from this. But again, this program is not tailored for those business owners. If you're one of those people, just contact us and we'll tell you what we can do for you, okay? But yeah, I look forward to seeing you inside. My name is Laksh Behel, and definitely check out Westernston's Strategist Chart program if you are interested in growing your business very easily, okay? This is easy stuff. Growing the number of leads from 1,000 to 1,050. I'm telling you right now, we have members who have grown their number of leads or, reduced their cost per lead from $200 a lead to $50 a lead to $20 a lead. I mean, they've cut their advertising costs or, had the same advertising budget, but multiplied the number of leads by a factor of 2, 3, 4, and 5. If you want to see some of those case studies, let us know. We can put you in touch with one of our clients, okay? We don't publish their information publicly, but we can get you a phone call with them if you're interested. My name is Laksh Behel, and I hope you enjoyed this video. I'll see you inside.